You saw the change in the housing market. So when I'm just curious, the aha moment, like when you were like, this does not look good. Like what was like when you were like when was the aha moment? You're like, holy smokes! Like you knew there was going to be a significant problem.
Right. Yeah. There's a couple of moments in there that I remember really clearly. And we track things like, in that active market, it's not just about like, this is what the house sold at, but it's like, what percentage of homes that are on the market have taken price cuts? What percentage were on the market, went into contract, and are now relisted, or went off or got withdrawn and are now relisted, right? So, you can look, there's all this signal in the active market, and we could watch the relisting rate go up, right? Withdrawn, relisted, not getting any offers, and we could watch that starting to tick up. We could watch the price reductions ticking up. We watch the price of the newly listed homes each week.
And at this time, there was a lot of inventory too.
There's a ton of inventory. Yeah, and so, I was new in the space then, and so I think my data's telling me this, but I didn't really know enough to be like, oh, I'm going to go trade $1 billion worth of mortgages. But.
All right, everyone, we got Mike Simonsen. He's the founder of Altos Research and currently the president, correct? Did I get that right? I got it right. All right, so we were laughing. I was like, you're the real data guy. Like, we're all just stealing your data to talk about it, and we're like, we're the data guys. We're laughing that Logan's the data guy. I'm like, no, you're actually the data guy. But one thing before we get started, I was reading about you, and it said you have a passion for data, and to answer the question that everybody wants to know is, how's the market? Right?
Yeah.
And it's kind of funny because people go, you can't ask that question, because I think a lot of people know how to answer the question, right?
Right. Or in the real estate world, we're all taught to be positive. Right? So how's the market? And people are like, it's great, even though everybody knows it's not great.
8% rates aren't great.
Great. So so answering that question with data is how you put yourself in a powerful frame. Right? Yeah. People know what the data is. And so how's the market? Well, in Austin, there's 85 homes for more than there was last year. That's a message right there.
Yeah.
Just use data.
Yeah. So before we kind of get about your background, I missed it because I was out here talking, but you kind of mentioned something yesterday. You're like, oh, you got to hear my story about how, I believe you said how you saved Goldman Sachs.
Yes.
Okay, so I got to hear the story because I did not hear it this morning, so I want to hear it.
Yeah, so I saved Goldman Sachs from bankruptcy.
This is awesome.
It was me and Warren Buffett.
Okay.
So it's 2007. Okay. I'm a year into Altos. I got started the company, a year into the company, and we have real value in data. But I don't know anybody in the industry. I'm just building the business, and so I'm at a conference, and on stage were the guys talking about the mortgage derivative trades, right? And this is 2007. They're still like masters of the universe, right? Okay. These guys are trading and making billions. And on stage, there's a guy from Lehman, there's a guy from Goldman.
So it must have been early in 07, right? Or was this?
Yeah, it was early. It was
this
early
before
in 07.
the cliff was.
Yeah, and so yes, because I think these guys need the Altos data, and so I sneak back into the speaker lounge after that, and I go find him. I go to the guy from Lehman Brothers, and I say, look, hey, I'm Mike from Altos. Here's what we do. We track every home for sale in the country, all pricing, all the supply and demand, all the changes in that data. I hand it to you. So you see it once before you see it in the traditional headlines and the traditional data. And the Lehman Brothers guy goes, Mike, I know exactly what's going on. I don't know what's my...
Wow.
And then I was like, okay, this guy's not my customer, right? But let me go, I'm undaunted. I'm going to go to the Goldman guy. I go to the Goldman guy, and I say, same thing. I'm Mike from Altos Research. Here's what we're doing. Track every home for sale in the country, all pricing, the demand, all the changes in that data. And we hand it to you, make it research channels. He goes, you got Sachs. He goes, that's interesting. Let me see a sample. If I like it, I'll buy it. And 12 weeks later, the Goldman, the mortgage derivatives is my client, first Wall Street client. 12 months later, Lehman Brothers ceases to exist. Right? They entirely out of business and almost bring down the entire global financial system. Right? Yeah. And what happens? These guys are the Goldman guys get the Altos. They are smart enough to let the data tell them what's going on. Okay? Everybody's got vibes. Everybody's got an opinion. I know it's going this, but they were smart enough to tell us what's going on. And there's, when you watch the active market, there's leading indicators in there. We can watch changes in pricing. We can all of the things. In the traditional housing data is like, these homes sold last month or 2 months ago. And the house is on the market now, gets an offer in November, it closes in December or January. You start hearing about that in February.
Yeah.
But I can tell you right now what's happening. And so the Goldman guys were like, great, they got short the mortgage market 1 quarter before everybody else. And so they went short. They were like, wow, the market's changing. They went short. They didn't go out of business. Lehman rode it all the way through and almost crashed. And so it was, it was me. I saved Goldman Sachs.
Were you giving the research to the big short guy? Like he knew, like he kind of was looking at your data in a way.
Yeah, that's right. All of the guys that are in the Big Short, like the Goldman guys, like those were my clients.
Okay.
And they were those smart enough ones.
That's how they did.
They were smart enough to go, data could be useful to me. And it turns out it was useful to them.
Question about that time. That's interesting. Is you saw change in the housing market. So when I'm just curious, the aha moment, like when you were like, this does not look good. Like what was like when you were when was the aha moment? You're like, holy smokes! Like you knew there was going to be a significant problem.
Right. Yeah. So there's a couple of moments in there that I remember really clearly. We track things like, in that active market, it's not just about like, this is what the house sold at, but it's like, what percentage of homes that are on the market have taken price cuts? What percentage were on the market, went into contract, and are now relisted, or went off or got withdrawn and are now relisted, right? So, you can look, there's all this signal in the active market, and we could watch the relisting rate go up, right? Withdrawn, relisted, not getting any offers, and we could watch that starting to tick up. We could watch the price reductions ticking up. We watch the price of the newly listed homes each week.
And at this time, there's a lot of inventory too.
There's a ton of inventory. Yeah, and so, I was new in the space then. And so, it's like, I think my data's telling me this, but I didn't really know enough to be like, oh, I'm going to go trade $1 billion worth of mortgages. Like,
but what you know now, like if you reverse, you knew now, and you do it, you would have been sounding the alarm like, oh my gosh.
And what's really fun is, when you watch the real-time data, headlines are 2, 3, 4 months behind.
With rates. Rates are down. You're like, no, they were down a week ago. They're back up.
They're back up. Yeah, that's right. So the headlines are way behind. And the traditional, housing data is looking at sold data, and that's by definition, it's months after the activities happen, right? And so what's fun is that when you get to be contrarian to the headlines, and the best times are when you get to be contrarian and bullish. So then it was like 2009, 2010, 2010. There was a new first-time homebuyer tax credit.
Okay, I remember.
Forward.
Yeah,
full demand.
Obama, right?
Yep, okay. Obama, and full demand in 2009. It ended April 1 of 2010.
Okay.
So by the end of 2010, all the demand had been pulled forward. End of 2010 looked really bad again, like Armageddon. So the headlines, first quarter 2011, all markets tanking again, Armageddon and housing. But we could watch the real-time data. People were buying houses. And so then I'm my clients, I'm going, guys, people are buying. And like, I was at one of the biggest false players in the world. And I'm sitting there and I'm like, look, data's bullish, right? He's like, you're the only person in the world who's bullish on housing right now.
This is a house buyer?
This was like, one of these giant, one of the giant guys. And they trade, billions of dollars of equities and like everything matters about housing, right? And so they were like, you go and sit there and they go, okay, what's happening? And I said, people are buying houses. And it was...
The data doesn't lie. That's like right there.
Right? And so like, it's really fun. We get to be contrarian and bullish. And so right now things are kind of rough, right? There will be a moment sometime in the next 6 months, a year, whatever, when we get to be bullish, get to turn, or the headlines turn, because we're watching like the market.
So explain, when you say bullish,
yes.
When you mean bullish,
yes.
Can you like elaborate what exactly you mean?
Yeah, that's a good point. So when I say bullish, I mean people are buying houses. Means like we can see that demand is there. We can see
healthier market.
Healthier market. We can see that there's more transactions happening. We can see that there's support for prices. Right, when rates are starting to go up high and nobody's buying, like
affordability,
prices can be ratcheting lower, right? And so like when I can be confident that there are all those signals are in the data, then I can be bullish on housing.
Do you foresee? I think this is, but I know there's 50 states we have, so it's all over, and then within the states there's all these markets, right?
Yeah.
Like you just showed on the screen about Austin. One, you're picking on that. Do you foresee a inventory problem down like nationally for a while, and then obviously in places like maybe I live in San Diego, it just always seems to be one. Do you foresee just moving forward, like housing market's just going to be dealing with the inventory problem for the foreseeable future?
Yeah. So the way I'd ask the question is like, when will we get some? Yeah. So there's a common misconception that like once rates fall, we're going to get some inventory.
This is literally the home buyer's ideal.
Yeah.
So let's stop right there. So most people think rates are going to fall, and then all these people are going to list their homes, and then we're going to have all this inventory, and prices are going to go down. I've heard 10, 20, 30%. That's what I'm waiting.
And they're like, I'm going to wait.
Yeah.
And so data shows lower rates, less higher, and you can do it over time, right? So
it's crazy to think that, but that's just what.
Yeah, and the reason it is because of holding costs. So when rates are low, it's especially ultra low. It's really affordable to 2 houses to keep my first one, buy the second one.
You can even refi out of a high rate, get back
into the low rate. And so we hold more. When rates are low, we hold more. When they're higher, those deals pencil out. I sell my first one to finance the second. So inventory rises. The rates have been falling for and inventory in 20 rates rose 4%. Inventory started 2019 first year. 2020 rates fell dramatically. Inventory fell. Last year rates spiked. Inventory spiked. This year inventory rates are climbing now. Late in the year in October, inventory is climbing. And so what that means is next year if rates fall, it'll get more affordable. Your payments will get more, but your selection's going to go down.
And you're going to be dealing with a lot more competition.
A lot more competition. Yeah. So what happens is lower rates spur demand. They don't spur supply as much.
Yeah.
So what'll get us to more inventory over time, higher rates for longer. And it took us a decade to get down here. So a decade of higher rates finally builds up some more inventory. Like it's less affordable to hold 2 or 3 houses.
I see.
And so I put some of them back on the market.
Okay.
So that's one way to get inventory. Another rate is job loss recession. Right? Those are jobs.
Flight to cash.
Flight to cash, right? Exactly. I have equity, so I can sell my house. Yep. And so the way to think about that is right now everybody's job record levels of employment.
157 million.
Whatever. Yeah. It's like everybody's
very healthy.
You're very healthy and like scary healthy. Like that's why interest rates are so high. But everybody's job, and it's really about 12 months from jobs before we start seeing the inventory. Right? Like now, start jobs. Let's say recession hits first quarter. Let's say it hits whenever it hits. Then recession, we really feel it hits quarter. Then it's 2025 before people start to see that inventory because it's like I lose my job, I try to get another. Now I'm on for 9 days. Then I kind of start missing payments, and it's another. It's 6 months before they even start talking about maybe selling. Right? So it's really a year before that inventory. So if you've got buyers sitting there waiting, like one of the things to keep in mind is like maybe some of that happens. Right? Maybe we get a severe recession. I've been expecting it for a long time. Right? Sometimes it's going to hit.
The longest expected recession ever.
And sometimes it's going to hit. And so yes, like some supply could happen. It's probably another year out. So it's probably at least 2025. Maybe investors, right? Maybe put some on. Maybe Airbnb aren't getting rent.
In
put
certain
those back
areas.
In certain areas. Yeah. Maybe those have. And the most important thing to remember is that none of that. None of those. Even if you assume that that's got to happen, like that those investors are going to cash out and unload. None of them. Nobody is doing it. Basically anywhere in the country. Maybe a little bit in Austin, right? Austin is the only place where inventory is up.
We've been working on this for the past few months.
We always want to bring as much value as we possibly can, and our partner, Prime Corporate Services, is all about bringing you a service you can't get anywhere else at a price you can't get anywhere else. Whether you're new to owning a business or owning a property, or you're an experienced property owner or investor, Prime Corporate Services is not only going to help you, but they're going to make the process so much easier. So if you book a call, the first thing they're going to do for you is help you understand what your business structure should look like, your corporate structure, tax planning, estate planning, all of that. Maybe you're saying, I'm brand new to starting a business and all this sounds foreign and complicated. Remember, this company helps new people just getting started every day. They're going to help you form the entity that's best for you and walk you through the process. Before I found this company, we paid thousands of dollars to other attorneys, CPAs, and consultants to try to understand exactly how we need to be structured to be as protected as possible. We've also gone the other route and used online platforms to form entities which unnecessarily put us at risk. You guys, you don't have to do that with this company. They'll do all of these things for you at a reasonable price, so you never have to think about saving money at the expense of exposing yourself to liability. We've searched high and low, and you will not find this much value anywhere else. All you have to do is schedule a free call today. Just go to primecorporateservices.info/GITCG. Once again, that's primecorporateservices.info/GITCG. We'll also leave the info for you in the show notes.
So you're hopeful maybe 25, it's more of a normal, healthier inventory level. Like not, maybe some places are just always going to struggle, like San Diego or wherever. San Francisco always struggled with inventory until recently.
Yeah, and well, even now, and so
still pockets are still
rates staying at like 8% or more in the next year, inventory will rise. We'll have more selection. If rates fall between say now and January, you're going to see buyers, and so you're going to see less inventory, less selection next year. That's what happened at the beginning of this year, where we started and inventory went low. California is kind of different from a lot of the rest of the country. We have chronic shortage in California of inventory, and it's like the Prop 13 is the tax law, so your property taxes. So you hold on to your house for the holding costs are low forever. I'm locked into a 3% loan, and my taxes don't go up. I hold this house forever.
People stay. I think California the longest stay in their house 13 years. So it's crazy
because it's best deal to never sell. And so we have chronic shortage in California. And compare that to Texas, property taxes are high in Texas. And so you get turnover, get higher affordable housing market because property taxes are high, which is a weird thing to think about, but that's how it works.
Wow. Yeah. So let's go back. I know we're going to get some fun tangents.
Yeah.
So Altos started in 2000. How in the world, like when I know what you do now, I'm like, wait a minute, how do you just start this? Like, how does this begin? How do you find this data? This seems like overwhelming.
So, yeah, I am a data software. I'm not a real estate guy. I'm a data software. And my whole Silicon Valley career, and I were like, what kind of data can I make available to the world? And then I happened to buy my house. I'm 30 years old, 2001, right? I've got $1 billion mortgage. Like and this is the NASDAQ bubble, 2 bubbles ago.
Yeah.
Right? The NASDAQ bubbles, I needed to understand. And I started looking at data. It was at that time, the first moment as an outsider, I knew what was for sale. It was on the internet. Where the guy with the and so I started building it. I did it for a few years for my local markets. After a while, I knew I had more information. And so we did it locally. And then there were some, things that were like some of my, I stole some of the things that I did in other data software projects. Like one of the things we do at Altos is do every market price change. High end of the market may be behaving differently from the low end. And that was like those 4 quartiles, took that out of a previous product. I was like, I want to do exactly that. So I knew I bought the cheapest house in Los Altos and was going to remodel up a quartile and what's the price per square foot here? How many bedrooms is that? Does that mean, but I can't move up to the top because that's twice as much land, right? All of those kind of things. So that's in that presentation that was really valuable to me at the time. And that's how it came.
So how you're finding your data, is that like a proprietary way? Or?
Yeah, so we track every home for sale, and we do all of our Altos data ourselves. We do all the analytics, and it happens like different local realtor associations measure the way they have different rules about when you can relist it and reset the DOM, all these things. And so we track the whole country. And so you could go in the Altos data and look at any zip code, understand what's happening anywhere in the country. It's all based on that.
Wow. And then how long did you write a software?
Yeah, so I did like the early, the prototype stuff. I did it for me, and then I had a CTO co-founder who was like, automated, build it for the whole country. And then over time, of course.
And then you merged with HousingWire.
Yeah, HousingWire acquired us last year.
I feel like that was a really smart move on both.
Yeah, it feels really great. The HousingWire values are well aligned.
Passion of what you're doing. Exactly. That's what I noticed with everybody I talk to here. You have such passion about what you're doing, which shows in the research, data, the whole thing. Not just talking to you guys, but you see it.
Yeah, and that's exactly right. It feels good. And so the HousingWire, is a media company, and we're a data company, but the data drives a lot of media journalism, and there's a lot of reach. So it's like Bloomberg is the data and media.
So do you have any competition kind of for what you do, or are you kind of now? But then
there's a lot of ways that individuals can go get data. Realtor, I can go download stuff, MLS, and so in a sense that's our competition. But it's like I can change the oil in my car too, but I don't. I can do it. And so like some people like to do that with the data, and a lot of those folks are our clients too, and they use different things. But when I started, there was nobody had any idea. Now, like people have much more idea about how
more of a data world, right?
Yeah.
Data-driven world.
That's right.
Okay. And then who you obviously sell this information to a lot of third parties, like not names, but what are you selling it to? Home builders? Are you selling it to brokers? Are you selling it to maybe Wall Street firms or people that want to buy homes to know what's going on? I mean, and then is this when they're making? It's funny because you probably know who you're selling to, and then you'll see something on the news as so and so is going to go buy 10,000 homes, and you're like, that's my my client, this is a good time, they're watching the data. Do you kind of see this and know like this is going on? Because you have to. You're part of it.
Yeah. So the clients are about half businesses, realtors and brokers and loan officers. Okay. And it's really how do you reach the Kenny report to your clients? Yeah. Right? Your clients have opinions about housing. Like, look, you're shopping. I'll put this in your inbox every Monday because I want you to watch what's happening. And so we brand it for you, automatic email it. This is about how the other half of the business is institutions based. So evaluation providers, AVMs, or home builders, or the mortgage traders or lenders, or the Wall Street, all of those folks. People who have exposure to the housing market need to know what's happening right now, and that's how they
insurance companies.
Yep. Okay,
insurance companies
be there too. Yep.
Yeah. You know what's going on. Absolutely. What when you like compile this data and stuff, what are you? Okay, so let's say I think what like a lot of the audience, a lot of stuff I hear, I think I guess somebody that's going to listen to this and they're watching the main news. They're hearing. I was telling this to Logan. They're hearing rates go down, prices are going to go down. They're hearing all this debt, credit card debt, all this stuff, right? Yeah. All this noise. And I think the consumer right now is tell them a rate out. A lot of people are on heels on defense. Rates were 6.5. I think a lot of people are like, I'll buy, I'll refi when the rates down. Now they're kind of like, I'll wait. This is getting a little bit much. But when somebody's saying, they call me, hey Kenny, what is it? Maybe they want to buy real estate, invest property, or want to buy a home. They're waiting something. What could you tell general? Like, what should somebody be looking for? Trends market, not from your point of view, but that they probably could watch and see. They should be seeing changes. They think this might be a good entry level, or maybe like, hey, changes you think that are going to come. Maybe that deal you're learning might be really farther out. I think so. You waiting?
Yeah. So
kind of a loaded question, but I'm trying to break it down to like.
There are there's I think a bunch of folks who are waiting. Payments are higher than they've ever been. Yeah. Like it's a real deal, right? Yeah. I want to wait. It's okay. On the other hand, if you are sitting back like I'm waiting for the bargains to price bargains, like prices are going to tank 30%, whatever your hypothesis. There is no anywhere in the day. There's no anywhere in the day of a surge of inventory. So, like I mentioned, like if rates go down, inventory is going to go down. It's crazy, right? So there's no signal anywhere in the data of a surge of inventory. So if you're in the market, just know that, right? Like it's if you find the house that you like, you can afford. Like it's okay to buy that house. If you don't like it or you can't afford it, don't buy the house, right? But also, how long are you going to wait for this bargain? Because people have been telling me, like, I'm going to wait for the bargain for a decade. They've been telling me that, right? And so, like, how long are you going to wait for that? So like that's something for people to think of. There's no sign anywhere in the data of a surge of inventory. Homeowners are really well financed. They have tons of equity. They have ultra cheap mortgages locked forever. California, they also have their taxes locked. Like there's no homeowners, almost none who are, and everybody's got a job. So like all of those things bode really well for homeowners. Right? There's no sign anywhere that is right now. You can see mortgage rates at 8%. Like there's fewer buyers. You can see price reductions ticking up. So you can see a little bit of downward price pressure. But it's on the order of a couple percent. It's not 30%. There's no sign in the data anywhere. So like if that's your hypothesis, like you have to look for that. Like I look for those signals every day. So that's something to think about. If you're on the fence, I'm just going to wait till a crash comes. Wait, how long are you going to wait?
Okay. Well, we got to wrap it up, Mike. But we'll have to do something again.
Anytime.
I'd like to pick up from here.
Great.
Awesome.
If you're already a real estate investor, you know that aside from cash flow, you also get huge tax benefits by investing in real estate. But are you taking full advantage of all the potential tax benefits? We've been working with Tim Looney at CSSI for a few years now, and he's saved us and our clients hundreds of thousands, if not millions of dollars in taxes doing cost segregation studies on their properties. Let me give you a few examples. We bought a property in 2019. If we had just used straight line depreciation, we would have saved about $18,750 in taxes. But because we did a cost seg, we saved $258,000. That's $239,350 more than standard straight line depreciation in the first year. The other great thing is, if you're classified as a real estate professional, you can apply this to other sources of income like W-2 or 1099 income, and you can also roll over any unused depreciation to future years. If you've owned your properties for a few years already, don't worry, you can still do a cost seg and save big on your taxes. This is not tax advice, so consult your CPA to see if you qualify to take advantage of these benefits. Call or text Tim at 318-469-9861 to get your complimentary property analysis. Once again, that's 318-469-9861. And I'll also include his information in the show notes. You guys don't want to miss out on these tax savings.